Samir, does the FII versus the promoter of the mutual fund in India think differently about what happens post-budget over the course of the next 9 to say seven odd quarters?
No, that I don't know. But as a fund manager, since I am primarily and actually totally responsible only for the offshore long short fund, my trades and my views are more whether to reduce my net and what to do. And the mutual fund guys are trying to beat a long only index. So they have a different objective. And they might change one stock here, one stock there. I am much more aggressive than them.
What is the aggressive long short managing Samir Arora thinking about right now in terms of changing the portfolio stance, if at all?
So that I've already done in the sense that my net exposure, that is a long minus short, on around June, going into the elections and even after that, was 75%. Now
Okay.
it is below 60%.
Sorry, Samir, can you explain? I mean, just so are
Means
you a lot more
that
defensive?
no, that means I have shorted and I have reduced some of the longs on these extra, as I was telling you, these infra type, whatever, not infra, but capex infra, whatever you call it. Those I have reduced, not now, that I had reduced before.
Right.
Because I said it on TV also that the expectations were too wild. The expectations were too wild, and even a good budget could have not helped them beyond a point. Maybe then they would have extended by a few days, maybe a few weeks. My problem sometimes is that I am very fast, rightly or wrongly, in analyzing, and sometimes I'm right, but I'm early. And sometimes I'm wrong also. It's both ways. But I'm saying I just do everything fast because that is the way I talk, that's the way I act, that's the way I react, that's the way I am.
Okay. And so, no, which is fair. I mean, as long as it's yielding results and your performance speaks over the number of years. But Samir, the same argument of these extended valuations can be made for maybe some defense names, the shipbuilding, etc. as well, or not quite? Stretched valuations.
I am talking about those names only.
Okay, only. Okay, fine.
Samir, are you completely done with the PSU story? Because this disinvestment hopes
PSU
are...
financials.
Yeah, PSU financials you still like?
We have, yes, both.
Okay.
State Bank, Canara Bank.
Okay. And in financials overall, do you think financials...
I still like the financials the most because financials at the end of the day, they are able to connect themselves to whatever good is happening in the economy. Sometimes it's the consumer growth, sometimes it's the this thing growth, sometimes cost reduction. Now for HDFC Bank, it is balance sheet improvement, whatever. They are able to do that, and generally they have a good history. And generally, and I think even this year, their growth will be higher than every other segment of the market. And many of the other segments would not even grow at half their rate. For example, I guess big picture, the financial guys will grow their earnings till maybe 15, 16%. Even HDFC Bank will grow maybe 13, 15%. And I don't think a single IT guy will grow that much. Or if they grow, they will be considered as the biggest heroes that this market has produced. And the consumer guys will never easily grow like that. The big staple guys, I mean. So therefore, and they have not done well for 2, 3 years, but they have done well for us and for the market for the last 25 years. So otherwise, people don't think that these are some unknown fellows and, we are betting or they will bet on some shady unknown names. They have gone through this relative underperformance, and that also driven mostly by the performance of the big 3, 4 companies, which is HDFC Bank, Kotak Bank, Bajaj Finance types. But the rest of them actually have also done well. So therefore, we always like and continue to like and continue to justify to ourselves are overweight in financials.
Okay, so financials is overweight. I wondered if you have a view on real estate after this removal of indexation. I think people are still trying to figure out.
No, that actually, I don't think it. We don't have, by the way, even one real estate company right now, but I don't think it is bad for real estate. We had it, but we sold it about a month, 2 months ago because it was just too much. Everything has, and actually the stock, the big one hasn't gone up for the last 2, 3 months anyway because it's just, we can see it. That it's too much. Something has to give up, and every time you announce a project and then you sell X thousands of crores, then next quarter you're supposed to sell 2X thousands of crores. How can it go on? We also know broadly how many people are there. And even yesterday, by the way, I saw one interview maybe they came on your channel, I saw on, I think, another channel, basically saying that I am now hoping that investors will come back into real estate. Excuse
Ah,
me,
it's the reverse. Yeah.
we always thought all our life that end consumers are supposed to come into real estate, and when investors come, it is going to end in a problem, as it has always ended for the last 5,000 years. So you don't want investors. Even I don't think the government wants investors in real estate, because one of the objectives must be to lower real estate
True.
prices so that people can afford. For example, in Singapore, if a foreigner now buys real estate, there's a 60% tax, which used to be zero maybe 10 years ago. So the idea was to make real estate prices low, for to somebody to feel proud that now investors will come into this sector, means that there's nothing much. But I think otherwise, I don't think it is bad for the sector. It is bad for the old properties where some trade-off will be there, whether this scheme is better, that is better. But what is it? That is history. Those guys can make less or more. It doesn't change the dynamics for the new guys. From the new guy point of view, the tax might be better off only, I think.
So okay, so real estate was never
But what
something.
I'm saying is you can't make that story that we will now get speculators into our market. I mean, how can that be a presentable story? But people talk different things when.
Okay, so the one big idea, Samir, and while we let you go, and always fascinating chatting with you, the one big idea, the one big trigger that now that the markets will look like, elections are done, budget is done, quarter one earnings, of course, we'll have to wait and see what the full picture looks like. What's next?
No, actually, I don't think that every day you need a trigger. You basically need that the earnings should come through, and your valuation should not be so high that those earnings growth gets wasted. Let's say, for example, Bajaj Finance last 2, 3 years, their earnings grew. But because that time the valuations were high or whatever, maybe hindsight, maybe that time, right or wrong, somebody may have thought, but you did not get that in your stock market returns or in your stock gains. So that is the issue with all these sectors and all. Many of them will grow and many of them will grow less. You want that, you should not waste that earnings growth by having valuations which are very high. Therefore, I am not saying, and I don't think anybody is saying that this market is very cheap or that, but I don't think it is expensive. It is that a plus minus the earnings growth you will get. But since that earnings growth was 10, 12%, and then you put in a tax which makes India relatively unattractive, you lose, according to me, 4, 5% for that. Now, whether you actually lose it or that also we hype because our mutual fund guys are getting money, it's a different game. But please, one thing I should say, big picture. Let us not think that there is only one country in the world. I only invest in one country. That is my job. And for 30 years, I've been doing it. But realistically, please understand that there is not only one country. Just yesterday night, not even day before yesterday night, Google, which is a $2.2 trillion market cap company, which means 45 or 50% of India's market cap, grew its revenue 14% and its profit, I think, 28%. So in theory, a global investor could, instead of putting money here, could put, because they put 2%, they could put 1% more in Google, they will get higher growth as of today. And they've been, that higher growth has been there for long. They will always be able to find 20 companies. So I'm saying big picture, let us make India at least tax neutral, ease of accessing neutral. Then everything else is in our favor, and we are the biggest beneficiaries if the market does well because of this thing. But on the margin, in the short term, for the next 2 months, or 1 month, I've reduced my net. So I'm telling you that today. Otherwise, it looked like all these other guys were talking about 20-year stories, which is true. It's a different story, but there are 20-year stocks in the world also.